Good afternoon. Welcome to today's Wednesday market review. My name is Stock Darts, and we're going to do what we do every Wednesday. We're going to take a look at the four major markets. We're going to look at the S&P 500, the NASDAQ Composite, the Dow Jones, and the Russell 2000. Once we finish taking a look at those four major market ETFs, we will then take a quick look at the US dollar. We'll look at oil, gold, and silver, and then we'll move on to chart requests. Anyone in here has a chart request, feel free to add it into the chat. Those of you that are watching this recorded somewhere else, you can always follow me on Twitter at StockDarts and message me there, and I'll be more than happy to accommodate any kind of chart requests you guys have. If you like what you see, you can always, as I said, follow me at StockDarts on Twitter. You can find videos on YouTube at StockDarts, or you can visit me at patreon.com/StockDarts, where I post weekly blog content, typically watch list and trade ideas, as well as just kind of expanding on some of the thoughts we come across on these Wednesday market reviews as we try to dissect and analyze our current market environment. Once we do that, usually that's the type of trades that I look at for the following week or two. So make sure that you are visiting those three pages or those three areas if you like what you see here and you are more interested in more of my content. Fat Boys, we will definitely take a look at GBTC, which is that Bitcoin ETF that's, I think, over the counter, an OTC, but Bitcoin has had a nice move recently, and so we will definitely take a look at that. It's been doing some interesting things. Other than that, let's go ahead and get started. We'll take a look at the S&P 500 first and look at SPY. Now, this is an interesting week. We have FOMC today, and I think it might have a pretty decent impact on the markets, just judging by how the dollar and gold and silver have behaved over the last few weeks. And then tomorrow we have Facebook, Amazon, Apple, and Google all reporting earnings. So 4 out of the 5 FANG stocks all report earnings on the same day. Happens to be right at the end of the month. And so I expect the market to pick up some volatility in the next couple of days and definitely into next week. So we are definitely at a point now where we should start to see the market begin to really move in one direction or another. I think that for the most part, this last week and a half, 2 weeks, we've been kind of really chugging along, trying to really fight this level of resistance that we're at on most of the major ETFs, and I think it's all going to come to a head here over the next couple of days, and we should finally get a little bit more clarity as to whether we're going to see more all-time highs on different indices besides the NASDAQ, or whether we are finally going to get a turnaround and a bit of a pullback. And like I said, I think we will definitely get a lot more clarity in the next couple of days. So by next Wednesday, we should have a much better idea of what the market wants to do next. Now, personally, I think there's actually good signs that the market might actually want to pull back here. However, that's just based off of what I'm seeing in the US dollar and what I'm seeing out of gold and silver. We'll get to that in a second. If we just take a look at the SPY in a vacuum, we'll see that so far it's not doing anything terribly negative. However, you can see that it is losing a little bit of its bullish formation. Last week we talked about this rising wedge. And typically when you get these rising wedges, you'll eventually get a quick 1 or 2 day move down. And then what's happened, of course, is now we've had a bounce. And now we've reached that point where we really need to figure out what it wants to do next, because what often happens with these wedges is you get the quick drop, and then if you get a bounce, you get a bounce right back to that breakdown point, which is right where we're at, or very close to. And then now's the question: do we resolve again to the downside and have a new leg down, or do we kind of ignore this and start climbing our way upwards? And I gave you guys some examples of this chart pattern last year, and as you can see, despite the fact that it looks bearish in real time, a lot of times these rising wedges don't actually end up signaling any kind of a real change in character. As you can see, last year we had a rising wedge that began in October, and then it eventually led to a quick drop of a few days, but we just kind of ignored it and kept climbing upwards. And we formed another rising wedge that lasted another couple of months, and eventually had another drop that lasted maybe a week, and then made another rising wedge. And then it was that last rising wedge that really we started to get the drop in the market, but this was really due to the coronavirus more than anything else. And so what's important to notice during these rising wedges is not necessarily what happens into them, but how they react after. And so what we're going to see now is what happens next. Now, like I mentioned, we are struggling with a pretty strong level of resistance here on the S&P 500. However, as you can see, we've actually made our way through it. I'm going to go ahead and extend this trend line a little bit further. Make sure it's horizontal. And you'll notice that we were able to break through it, and then the pullback we had off of this rising wedge came back, retested, and we're actually bouncing off of that. So this is actually short-term bullish, intermediate term, well, basically bullish. You can see that we're holding above a critical level here at 320. The moving average kind of held the support and is kind of climbing upwards. The 50 started to climb upwards. We had that cross of the 50 over the 200, which again is typically a signal of a long-term trend. And so overall, this actually is bullish, and it's going to depend a lot on what happens again today as to whether this holds or not. Like I said, FOMC is coming today. We're going to see what they say as far as what their thoughts are on the economy, if they're planning on doing any more stimulus, and how exactly they plan on combating what is possibly a new round of businesses being shut down again, as we tried to open up and had a big surge in cases. And so if for whatever reason the market doesn't like what the Fed says, or doesn't like what comes out of the earnings reports tomorrow, then we'll lose this 320. And this is a very important area. If we lose 320 and we lose the 20-period moving average, I think it signals that the market wasn't ready to get back above this, and likely means that we're going to pull back. Now, one thing I will say is, even if we do pull back, it's not necessarily bearish. And I think that's one of the things that we need to take away from this. I feel like the market has become a little, I don't want to say overextended, because we have been trading sideways, but I feel like the market's feeling a little heavy to me, like we're really struggling with some levels of resistance, and I feel like maybe we need to pull back a bit and kind of take another shot at it. However, that doesn't mean I think that we're at a top or that the market is bearish. I think if anything, if we did start to see more selling coming into the market, I think it'd be more indicative of a sideways market, and one that needed more time to kind of exchange shares again from sellers to buyers, rather than a market that's going to top out and we're going to have a new surge back down to the lows of the year, even somewhere near that. I don't think that's really the case at all. I think that there's a lot of demand that's still underneath the surface, and you'll notice it. That's exactly what happened even last week, where we had that 2-day drop off of the rising wedge, and right away the buyers stepped in and supported. And that's been the case really throughout throughout most of the year, since about April. Anytime we have sellers kind of come in and impact the market, the buyers have been pretty quick to step up and offer support and demand, and start to let prices kind of go right back up. And as you'll see, if you just take a look at the chart, really two or 3 days of red candles is the most that we've really gotten in a row. And then it's followed by green candles, or if we do have a drop like we did at the end of June, there's still buyers that are stepping in and ultimately support price at a key support area and propel it back towards its highs. And so that's where we stand right now. Again, if we're just looking at the S&P 500 in a vacuum, this is actually a bullish chart, because like I said, we were able to break through this 320, come back, retest it, and we're starting to climb right back above it. And the key will be, like I said, what happens today and tomorrow. Does this become a false breakout and this whole area here gets reversed and we come right back below it? Or do we confirm this as new support and start to head back and try to fill this gap that we filled, or start this gap that we created in February, way back here, when we first started getting wind of the coronavirus and the impact it's going to have on our economy? If we close that gap, we're just a skip and a stone away from all-time highs, and I expect that to be a magnet for price action. And so if we make our way forward from today, if we make our way back to 327 or so and start to go into that gap, I fully expect us to eventually hit new all-time highs. I think that we're at a critical point here where we're trying to confirm support at 320, and I think if we do confirm it, the next stop is up at all-time highs. And so that's an area that you have to watch right now, is what happens in the next couple of days. And if we can confirm that we're ready to move past this level, well, the next level is up here at 333, which, like I said, is right next to all-time highs, which should act as a magnet. So if you're bullish, keep an eye on how we respond in the next 2 days to what all the news that's going to come in, and have your targets ready. If we falter here, or if you're bearish and you're wondering where we're going to go next, then keep an eye on 320. And if we fall below it, then expect the price action to move back to the 50-period moving average, and possibly down to 300. I expect 300, this 300 to 295 area to be a major level of support, and one that should offer buyers an opportunity to go ahead and step in. I don't expect us to lose that level unless we have really bad news coming in, and I would expect it to be something bigger than just the earnings an earnings event. For now, expect that to be a major level of support. So if we do drop and we do have a swift move down in the next couple of days, keep an eye on that as an area of support. If we lose that area, we have even more major support all the way down to 273. But again, that's not a level that I expect us to hit from here to next Wednesday, or even from here to maybe next month, or possibly even a level that we hit again this year. However, that is the other critical area, and that will be a major level of support. And that's one we can look at if, for whatever reason, we have a really big change in market character. But right now, we haven't really seen the market change its behavior patterns. And because of that, I would expect any kind of selling to be met with buyers, whether it be at the 50-pair moving average, the 200 moving average, or down here in the 295 to 300 area. So those are the areas you'd be looking at to buy the dip. All right. So those are the key areas. I don't know that there's much more to say. Like I said, let's see what happens with FOMC. Now, one thing to keep in mind with these FOMC days is don't overreact to what you see at 2 o'clock or 2:15. There's a lot of times there's going to be a move in one direction that's followed by a reversal, and then usually followed by even another reversal. So more than anything, pay attention to how we close today and how we open tomorrow. And again, because of tomorrow, all those earnings reports tomorrow in the afternoon, I think, like I said, by tomorrow afternoon or Friday morning, we'll have a good idea of where this is going to go next. And that kind of covers it for the S&P 500. The key levels, like I said before, are 320, 332 to the upside, and then to the downside, probably the 50-pair moving average would be the first level around 312, and then below that, somewhere down here in the 300 area. And I think those are the prices we need to pay attention to. Let me know, by the way, it shows again that there's some kind of a network error on my stream manager, but I'm pretty sure that everything's still working. So, Fat Boys, if you're for whatever reason the stream freezes or something, just let me know. All right, let's take a look at the Nasdaq. Now, interestingly enough, the Nasdaq actually was hinting at a double top last week, right? So we were looking on Wednesday, and we had this potential double top formation. We had the neckline down here at 255, and we opened on Thursday. We were below it, and we formed the hammer candle. And it at the moment has turned out to be a false breakdown because we had a quick move right back up, and we've spent the last 3 days trying to confirm that price action should be above 255. But you'll notice we're really struggling with the 20-pair moving average, and we're being knocked down a bit. This is part of the reason why I'm thinking that maybe we pull back off of FOMC and off of earnings, is because I'm starting to see a little bit of weakness in the Qs, which has of course been the leader and has been the index that has led the market upwards, especially during the summer. And so this is pretty important, right? If you thought 320 on the S&P 500 was important, I think 255 and a little bit below that on the Qs is just as, if not more important, especially when you consider the fact that it's basically all the tech names that are reporting earnings tomorrow. So this will be the index that is probably the most quickly affected by what's going to happen with those earnings reports. Now, at the moment, despite the fact that we're struggling with the 20-pair moving average, and you can see that we're losing momentum on the Qs, at the moment it's still bullish because we're right back above that 255. And so that initial breakdown was met with demand and with buyers, and we were able to get right back above it. However, if we continue to falter here at the 20 and can't get through it, and we lose 255, then I think it's going to be a quick move down to the 50-pair moving average. And that's likely where we will find initial support, is at that moving average. Typically, when you have these moving averages moving like 45-degree parallel angles, where you have the 20-pair just climbing steadily and the 50 climbing steadily upwards, when you lose that 20-pair moving average, you almost always come down and test the 50 and then go back and forth between them before you finally find true resolution as to where you want to go next. And so that's what we're waiting for on this case. And if we continue to kind of lose this area, then we're likely going to come down and test 247. Now, if for whatever reason the selling is stronger than expected and we go through the 50, well, we have a major level of support here at 237. Now, this is what was all-time highs earlier in the year. As you can see, we had that breakout, very similar to what the S&P 500 is doing now, except not at all-time highs. Where we had the rising wedge, we had a breakout, we had confirmation that level of what was previous resistance was going to hold the support. Tested it twice, and then eventually just took off and made new all-time highs here in the 269, 270 area. Now, we come back down to that area. That area has already proven to be key support, and I expect buyers to defend that pretty strongly if we come back down to that area. Tech has been the strongest area in the market, and there are a lot of people that have maybe missed some opportunities with some of these tech names as they've totally ramped up and just taken off. So if we have tech pull back sharply and come back down to this area, I expect this to be a level that a lot of buyers that have missed out and have missed opportunities on tech names to look at as an opportunity to finally get back in or take some shots at some tech names. So if you're one of those people, or if you're just looking to re-add to some of these tech positions, if we do, for whatever reason, get a stronger sell-off in the next week or two, and we make our way back to this 237 area, this is a good spot to look for a reversal and a move right and a bounce. So this is a good buy the dip opportunity or a buy the dip area, and I will be looking at a lot of tech names around this area if the Qs do come back to this area, and that will be a spot that I will look at as far as buying aggressively on a dip. However, I will definitely want to wait to see confirmation and see support step in rather than just buy. If we get two red candles down to that level, I'm not going to buy. I'm going to wait for a reversal pattern before I decide I want to buy the dip in this area. But this is going to be the major level of support and one that you want to look at if for whatever reason we get a sell-off in the next couple of weeks. Now, if we lose this and start to head back down, then we're probably going to come all the way down to the 200 period moving average. And at that point, it's a little bit more scary because we would have negated a lot of the price action from this summer, and we'll have made our way back down to what is likely going to be a range-bound market. So keep an eye on that. I think the 200 would be probably the limits of anything we can expect if we get a really sharp correction. However, more likely than not, if we get a correction, it might just be a quick one where the market stops climbing and starts just trading sideways. And if so, I think 237 should be a nice floor for the short to intermediate term price action. Now, there's always the case that the market continues to rally. And I think the Qs is one of the key areas that we want to watch. Now, if that's the case, then we're going to see a break above the 20-period moving average, and we're going to see a move right back to this 268, 269 area. If you'll notice, we have a bit of a descending trend line that we're starting to break today. Right? So, there are still signs of bullishness, despite the fact that there's a mixed bag here, right? Because we're still struggling with the 20-period moving average. But as you can see, we've been pulling back for the last 6 days now, 7 days. And today's the first day we're starting to break through this descending trend line. So in order for this to be a decisive breakout, we need to get back above the 20 period. And if so, if you see price action break above 260, then that's a good sign. That shows that the bulls are taking control of the price action and want to push the Qs back up into the 268, 269 area. So that is the other thing you want to look at in the other direction, right? So if we falter here and we can't get above the 20, we break back down below 255, well, you've got your bearish signal and you know exactly where to go. Down to the 50 period at the least, and then possibly down to 237, although again, that would be a pretty strong move to the downside. And then bullishly, or to the bullish side, if we break through 260, expect a move, in the next few days, probably all the way back up to the 268 level. Now, you'll notice again that I'm giving you scenarios that are bullish and bearish. Like I said, with the amount of news that's coming out in the next couple of days, anyone that's telling you they know what's going to happen is lying. We're not really, even though the idea is that traders are in the business of kind of predicting what the market's going to do. That's really not the case. What we do is we pick out scenarios that might occur, and then we wait for them to start to occur, and then you react off of that and try to trade that, right? And so what I'm giving you are the two likely scenarios that are going to happen, and what is the trigger point that would cause us to want to go ahead and trade in one direction or the other. And like I said, to the bullish side, the trigger point is basically 260, 250, well, basically 260. Anything above that is a good buy signal. To the downside, anything below about 255 is a trigger that we're likely going to come down and test the 50-period moving average. And so that's what we'll be watching in that direction. Other than that, I don't think we need to really venture any further down on the NASDAQ. And as far as 268 is concerned, we could push through that and make new all-time highs. but I'm still a little bit leery of getting too aggressive to the long side, um, in a market that I feel is still at pretty high levels of resistance. So personally, I'm kind of favoring or hoping that we get a little bit more of a pullback so we get more buy the dip opportunities. But I will basically take whatever the market gives me, and I think that's the way everyone should approach this market right now. You'll notice the Dow Jones a little bit different, definitely very different from the Nasdaq, and a little bit different from the S&P 500. Nowhere near all-time highs. Nowhere near this red line around 285, which was basically, relatively speaking, where the S&P 500 is right now. So, still a laggard and still lagging and weaker compared to what the S&P 500 and the Qs are doing. No surprise there, considering some of its components are a little bit more industrial in nature and have been affected a little bit more strongly by our economy being slowed down and shut down because of the coronavirus. And until we start to see people travel again, and we see the airlines pick up, we see some of these industrial companies start to pick up. Really, the Dow Jones is going to continue to struggle to keep up with its peers. However, in a vacuum, if we look at it, it's still not doing anything terribly negative. It's just lagging the stronger indices, right? We had a nice breakout above the 200 period. Again, coming back and retesting, and so far this is a bullish formation, right? We had a move upwards that eventually found sellers. We came back, we tested support twice, broke out. You'll notice the moving averages curling up and under and kind of rising up through price. The 50-pair moving average is about to cross the 200, which again is a signal a lot of technical traders look for as far as a long-term bullish trend is concerned. And overall, again, everything is still bullish. So this is all aligned, looking for a move upwards. And I think that's the key that we want to take is, despite the fact that you might feel, or even I might feel like the market wants to pull back, a lot of these chart patterns are actually still bullish. And until we see them negated, until we see some bearish candles come in and damage these charts, we have to go under the assumption that the market wants to continue kind of going upwards. Now, the signals on the Dow are not quite as clear as the S&P 500 and the Nasdaq. I think the SPY and the Qs both give us very, very clear signals as to what breaks, what would constitute a breakdown or a breakout. In this case, we really have a little bit of a more difficult time, right? Because a move back below the 200 doesn't necessarily, in my mind, mean that we're going to come all the way down to 251. It might, only because of what we see in the other two indices and whether it's a signal of a broader bullish or bearish direction. But generally speaking, on a chart like this, if you're just looking at this, there's a lot of support coming up. Whether we lose the 20, the 200, or the 50, until we lose all three of those, we can't expect this area to offer support. To the upside, we still have pretty stiff resistance just above the price action. So I feel like this is one of those where we don't have a clear signal that's going to tell us the market wants to rally, or we don't have a clear signal that the market wants to pull back. You'll notice that we're basically in the middle of a pretty decent range. Right, with no real clear support or resistance holding us from making our way back up either to the top of that range or the bottom of that range. And so in this case, I think this is one of the indices that doesn't really give us a clear tell as to what the market wants to do next. And I think in this case, what we want to do is just kind of let it do its thing and follow the other indices a little bit more closely. That might give us a better tell as to what's going to come next in the market. Now, like I said, you just saw that rectangle, so you know what the clear levels of resistance are, or the clear ceiling and the floor in our price action is right around 250 and right around 276, 277. Like I said, we're kind of 10 points away from either direction, and we'll see what happens, whether we can hold above these moving averages and start to make our way back upwards, or whether we lose them and head back down and test some of these lower levels. Right now, I don't really have any interest in trading the Dow or trading Dow components. I think I'm still more focused on other areas of the market that maybe are giving us better returns, rather than trying to trade something that's stuck in the middle of a range. It has just as much upside as downside. Now, the last index we want to look at is the small caps, and the small caps are actually very similar to the Russell 2000. Or sorry, like the Dow Jones, and that we're still kind of stuck in the middle of a range also. So again, if you take a look at what IWM has done since about May, and we're really just in a range. Now in this case, we're a little bit closer to the top of that range, and again, the chart is showing bullish signs of wanting to come up and test the top of that range, but lagging compared to what we've seen on the NASDAQ and lagging compared to what we've seen on the S&P 500. Again, you take a look at that red line, which relatively speaking is the same on all the charts, and you'll notice that we're really still kind of far away from that level. Still 10 points to go just to test the area where the S&P 500 is right now. And of course the NASDAQ would be well above that, relatively speaking. So still plenty of catch up to do here on IWM. Now you'll notice this ascending trend held again. Right, so we've been able to maintain this upwards climb on the small caps, and we're trying to do that once again and make our way upwards. Now I think if we lose this trend line, I don't think it's the end of the world, because I don't know that it's indicative of that much of a longer term trend anyway. But if we do lose that, then we're just going to come back and test some of these lower levels. Now, like the S&P 500, or sorry, like the Dow Jones, the 20 and the 50 are coming up to meet the 200 period moving average, and if we can get across through that, that again is a signal of a nice longer term bullish trend. So again, a lot of technical analysts are watching this and waiting to see when we get that quote-unquote golden cross where the 50 goes above the 200, which would hopefully negate this big drop that we had and kind of confirm the strong bounce we've had in the market throughout the basically second half of this year. Now, where can we go from here? Well, like I said, with IWM, very similar to the Dow, we have a ceiling of price action up here at the top of that range that we've spent the last couple of months in. So a move upwards would likely mean a move back to 153. If we break through that, we'll find a lot of really heavy resistance between 155 to 158, and that would likely be a really key area of resistance that the IWM can't get through. If we falter here and we start to drop, well, we've got all these moving averages just below price to kind of support it. So we'll see just what happens. If we slice through those moving averages, then we're likely going to come down and test this 137 area. And that should be good support, particularly with the way that the bulls have been able to defend price action throughout the year. So that would be kind of the areas that I'm watching on IWM. Now again, I think the S&P 500 and the NASDAQ are giving us the clearest signals as to what the market wants to do next. It's really easy to just take a look at those price areas that we're at and figure out whether we break them or lose them. I think because of where the Dow Jones and where IWM are, it's going to be a little bit sloppier price action until they get through these moving averages in one direction or the other. And then at that point, I think it'll be a little bit clearer. So for this week in particular, I'm watching the Qs and the S&P 500 as far as my tells as to what the market wants to do next. And if we react in a bullish or negative or bearish way, then I think we'll see the effects reverberate down to the Dow Jones and to IWM. But I think at the moment they're not the ones leading up or down. So I'd rather focus on the S&P 500 and the Qs, particularly the Qs this week, as far as trying to gauge what the market wants to do next. All right, so that's the four major markets. Like I said, I know these last couple of weeks, I haven't really given you a clear prediction of where price is going, and that's because the market hasn't been very decisive as to what it wants to do. I think that's going to change from here to Friday. I think we'll get a much better idea of what the market wants to do next, and we should get a much cleaner price action, or much more decisive price action as we come into next Wednesday. And I think we'll get a much better idea of what the market wants to do next, whether it's keep rallying through new highs, or whether it's correct a bit and start to look for a floor again, rather than what it's been doing for the last month or two, which is look for a ceiling. A lot of times you can just, if you want to really try to figure out what the market's doing, just ask yourself, is the market looking for a floor, or is it looking for a ceiling, right? And I think if you really think about it, for the last 4 or 5 months, the market's been looking for resistance. It just keeps probing upwards and trying to figure out where exactly buyers are going to start to say we don't want to hold anymore. And we have found some levels of resistance recently, but when you look at the market as an aggregate, particularly when you look at the Qs, we've still been able to push through those levels. So until we have conclusive agreement from from enough traders that the market has reached the ceiling that it's not ready to push through, we will continue to push upwards. And once we do have an agreement that the market is overvalued, it will flip and it will start looking for a floor. And then at that point, you can start to try to figure out exactly where that floor is and where we can start to play that range once it kind of figures out what the range is going to be in. So for the moment, it's still kind of searching and probing upwards, but it's found a lot of resistance recently, and so that's why we've been kind of chopping back and forth a bit. Like I said, I think we'll get a clear picture come next week and be able to really figure out exactly where the market or how it's going to behave next. But I feel like we are at a turning point that's going to come in the next couple of days. All right, let's take a quick look at the U.S. dollar, gold and silver, and this again is going to be important, I think, as far as trying to figure out what's going to happen in the overall markets. You'll notice that the U.S. dollar has had a big breakdown, and I think this is all leading into today's FOMC report. A lot of times when you have a run like this into a major news event, it could signal that either people are anticipating a big change or a big thing in the news, or they know something ahead of time. In either case, this looks like it could be a sell the news event where we have the big breakdown into the FOMC statement, and whether they're wrong, I think some people have maybe been anticipating negative interest rates, and whether they end up being wrong or right, this could be a sell the news event where we get a fade and we get a quick snapback rally on the U.S. dollar. And I think if we get that, that might lead to a drop in the market, just because, the market is still priced in U.S. dollars. And even though the inverse correlation between the dollar and the market is not that strong, I think sometimes when you have a dollar that quickly snaps up like that, it could lead to a drop in a lot of areas that are priced in dollars, and that could lead to a quick drop in the stock market, and definitely a quick drop in gold and silver, which we'll look at in a second. So that's something that I'm anticipating is a likely rally in the U.S. dollar. Now, I'm not going to guess, and I'm not going to just go long the U.S. dollar, hoping that that's what happens today in the afternoon. But it's something I'll be watching to see how it behaves. If we take a look at the euro U.S. dollar cross, and again, remember the euro in this particular chart, the euro up is good for the euro, and bad for the U.S. dollar, right? So you can see again the euro has really broken out versus the U.S. dollar. And it's just been really just on a straight climb upwards. Now, if we're going to get a snapback, then the U.S. dollar is going to make an impact here and push the euro down a bit. Now, you can see there's a lot of room to go here, and really it'd still be a bullish chart for the euro. All the way down here is where the 200-pair moving average is, down at 114, and we're all the way up at almost 118. So there is room for a snapback or even for consolidation. At the moment, though, the euro is in complete control of this chart. And if we look at the other two crosses where up is good for the U.S. dollar, again, you can see the U.S. dollar breaking down versus the Canadian. It has found some support, but it's still kind of struggling. But again, I think if we do get a little bit of a sell the news here on the U.S. dollar through FOMC and we get a pop, there is room for upside here and a reactionary bounce. And so there is a possible trade that's developing. And if we do get a continuation down and a breakdown, well, there's a pretty clear pattern here on the U.S. Canadian as well. Now, we take a look at the last cross we like to look at, which is the U.S. yen. You can see, again, the U.S. dollar broke down pretty clearly and pretty decisively against the yen. So this was the one currency that was kind of struggling, at least of the three that we follow, that was struggling to hold up with the U.S. dollar because the yen has been weakened quite a bit recently also. And eventually the U.S. dollar just really, like I said, this week has really broken down, leaned into today's FOMC report, which again has me wondering just exactly what they're gonna say in today's report. If we get a snapback, there's plenty of upside, and still be a bearish move on bearish chart on the U.S. dollar. So there is room for a quick bounce, even if the chart overall in the long term is still going to be bearish. There is room for a little bit of a quick bounce, whether it's a dead cat bounce or just a relief rally that could lead to a quick move on the U.S. dollar here versus the yen as well. Now, we look at gold and silver. Now, gold and silver have really ramped up again, partly due to the weakening U.S. dollar. And you can see they've really taken off. Now, we're starting to see today's candle again. When you see these types of hammers at the highs, that's the first signal that there are sellers that are starting to impact price. However, like I say with regular equities, you don't want to short this just because it's up. Uh, and despite the fact that I expect the U.S. dollar to maybe get a quick bounce, um, gold and silver have been so strong that there's going to be a lot of demand even once it pulls back. Now, as you can see, this is getting very extended, very overbought, and there's a decent chance that it's going to need to pull back at some point soon. However, I wouldn't call this a short. What I would say is if you are long gold or silver, this is probably a good spot to take some profits. Um, and generally speaking, as this thing has moved up, traders should have been taking profits. They should have been taking profits at the 175 area, somewhere in the 180s. Now again at this level. Um, when you get these liftoffs like this, yes, they could persist longer, but generally speaking, these are good times to start to take a little bit off as you hold. You want to hold some for a longer term move, but you also don't want to give back some of these explosive moves. And this has been a very explosive move. And like I said, it's likely going to pull back soon, but this is not the kind of chart that you want to short because it's been so strong. Same thing with silver. You take a look at what silver has done, and again, a very explosive move, huge volume, and really just keeps going up as particularly as the U.S. dollar has struggled. Now, gold and silver are also strongly affected by FOMC, the currents that come out of FOMC news, right? So there could be some significant movement on gold and silver today. Now, again, it could be that it keeps going up, right? It could be that these things have rallied in anticipation of something that is going to, affect the U.S. dollar even more strongly, and gold and silver will rally even further, right? So there is still the chance that these things explode even further upwards, based off of whatever happens today. Like I said, this is a very big run up into an FOMC statement, and so it's going to be interesting to see what happens. Because I wasn't anticipating any kind of big news coming out of FOMC today. But then when I saw the U.S. dollar, gold, and silver, and what they've done in the last couple of weeks leading up into today, it makes me wonder what's going to happen. But keep an eye on these into today's afternoon because they will likely move pretty strongly once we get an idea of what's going to come out of the FOMC statement. Now, like I said, I wouldn't be in the business of shorting something that's this strong. So if we do get a drop, then maybe we could look at levels of support. So let's look back at gold for a second. Now the issue here is, of course, there really is no level of support that we could trust right now that's very close. Now we have this gap here around 179. That could be an area. If we get a very short-term move, then maybe this 181, right? So we've got this area right here. That's likely going to be a level of support if we don't get a big move on gold or silver to the downside. If we get a big move to the downside, then the 20 period is probably what we're going to be watching and anticipating as the level of support. If not, somewhere in this gap, whether it's the top of the gap or the bottom of the gap, should be support. As far as silver is concerned, it's going to be very similar. We've got a gap here, and that's likely going to be an area of support. If not, we've got another gap. We've got another gap, but that's not one we need to worry about because the 20 will come up and be priced before that. And again, when you have an explosive move like this, you have all the moving averages. You can see again the moving averages cross the 200 and are starting to get that nice train rails action where they're just going parallel up in a 45-degree angle. That's usually very bullish. So when we do get pullbacks on gold and silver, it's likely going to be indicative of just a profit taking in the context of a larger term bull trend. So there will be chances to go ahead and buy the dip here and to try to get involved in them to the long side. Now the last chart we want to look at is oil. We're getting closer to being able to ignore this wick from earlier in the year. Alright, so this is what oil's done. Now you can see it's getting very, very close, or very, very tight. It's really struggling to make some moves over here to try to get above 42 or to drop this angle. Let's go to the 4-hour chart to get a better picture of these candles. Alright, so again, you can see exactly what's been going on. When we look at it a little bit more in the shorter term time frame here, So you can see what's gone on over the last couple of months. We really have a nice trend going here as it tries to climb upwards, but it's very shallow. Uh, Really struggling to get back above this 41 to 42 range. However, it has continued this upwards climb, showing that the market is still anticipating increased energy, but we're getting to a point here where something's going to have to give, right? We could draw another trend line right now and show this triangle. Something's going to have to change soon, whether it's a breakout or a breakdown, and I think we're getting pretty close to that. And again, FOMC uh, might be the catalyst to finally get this breakout, based off whatever the U.S. dollar does. But you can see we're getting very close here. We're getting all these converging trends that are going to have to force oil to go one way or the other. It's really struggling horizontally with this level, this price, this 41.20 price level. Short term, it's finding some bearish pressure, and intermediate term, it's still dealing with this bullish pressure. And so you got this little pressure pot, and it's all building up, and we're going to have a move one way or the other pretty soon that will indicate whether oil wants to go higher or lower. But we're getting pretty close to that. So that's another thing we want to watch, and another area that might resolve itself in the next couple of days. So keep an eye on that as well, because that might affect some oil names and names related to energy. All right, so that is the markets: oil, gold, the U.S. dollar, silver. Like I said, a lot of interesting moves coming into this week, and I think that we'll see some decisive action coming across the board in the next couple of days that will give us a better idea of what's going to happen next in the next couple of months. Another big move that's been happening recently is Bitcoin, which of course is what you were asking about earlier, Fat Boy. So the first thing I'm going to do is look at the Bitcoin US dollar, right? Let me see, which is the chart that I have might be this one that I have my trend lines on. Yep. All right, so let's go. First thing I'm going to do is look at a weekly chart, right? Because this is the chart that I looked at and I pointed out to you earlier this week when you asked me about Bitcoin. So for those that maybe don't know, I follow Bitcoin pretty well. I do hold several cryptocurrencies, and as you can see, Bitcoin has had, and the weekly chart has had a nice breakout. This was something that was already developing. It had a big breakthrough last week, and then this week we had the follow through as it was able to get back above 10,000 and has made its way all the way up to 11,000 now. Overall, I think this is a nice bullish move, and I think it's again showing what is in the long term a nice trend that's developing that could lead to a much higher move. If we go to the daily chart and we take a look at it on the daily chart, again you can see it's been stuck in a sideways trend. It's been dealing with that long-term descending trend line, and it slowly was able to kind of creep through it without really making a lot of news, right? And now it's starting to really break out. You can see the moving average is starting to curl up. Overall, this is again bullish. Look at the volume coming in as we surged higher, and I think generally speaking, this is a pretty bullish development, and likely means that there is going to be even more upside here. Now, the chart request, of course, was not that one. Was not the Bitcoin itself, but GBTC. However, this is an ETF that follows Bitcoin, and it's going to be pretty closely. The chart is going to look pretty close to what we're seeing on Bitcoin. Generally speaking, when I see these types of ETFs, I prefer to do my technical analysis on the base instrument, which is in this case Bitcoin, rather than on the ETF. But either way, we go ahead and we take a look at what's going on here. Again, a little bit different, but we are seeing a breakout of a decent trend line. Now, if we go to the daily chart, you can see, similar to Bitcoin, it's recently broken out. You can see the big volume coming in as more people try to get involved in this. Bitcoin, I don't want to say it's moving with gold. It is, of course, and this could be related to the U.S. dollar as well, right? Because again, Bitcoin, to a certain extent, Bitcoin is going to be inversely correlated to the U.S. dollar. However, you'll notice, I think Bitcoin is moving more on its own merits, and not necessarily a gold or not necessarily a U.S. dollar related move. And the reason I say that is if you take a look at what Bitcoin has done on the weekly chart, that's nothing like what gold has done on the weekly chart, right? Gold has been really ramping up. And we look at the U.S. dollar, and the U.S. dollar has been just kind of like stuck, right? So I would say that Bitcoin at this point, it's really more of just what Bitcoin's doing on its own. Not necessarily in the last couple of days. Maybe that's partly due to whatever's happening with the U.S. dollar. But I think that this is more a function of just more demand coming into Bitcoin. Whether it be because people are starting to rotate into this because gold is becoming overextended, I don't know. But what I'm seeing here is this looks more like just a Bitcoin related move, not necessarily an inverse dollar play. It could still be that, but to me what I'm seeing here is a little bit different. It could be the start of that. It could be capital rotating into Bitcoin now that gold is getting overextended, or people just being late to the party and saying, well, what else can I get that's going to benefit from a dollar that's losing value? And of course, Bitcoin is one of the easiest areas to look at. So it could be that. I'm not going to say it's not. But as far as moving with gold lately, I would say maybe the last 2 days. But prior to that, it really wasn't doing anything the same as gold. And more than anything, I think it's just, it's still contending with so many of its own issues, with people that actually believe in it, with regulation, with some of the weaknesses that cryptocurrencies have. So I think it's still struggling to get enough demand, particularly from the regular person rather than the people that believe strongly in cryptocurrency. I think it needs more wide adoption from the regular populace, and I think that's really what it's really struggling with. And this breakout is nice, and we'll see how far it can go. But at least it shows that we found the floor on Bitcoin, and this was important. This 8,000. This 8,000, 8,500, 8,900, this is a really good floor. That's important because Bitcoin just had that thing called the halving, which was kind of an important spot here. And this is really, at this point, anything below 8,900 would mean that it would cost more to mine it than it's worth. So this was a really critical floor that it needed to kind of hold and get back above. And it was able to do so far. And so this should be looked at now as a good support area on Bitcoin that should hold in the near future. So even if this breakout doesn't hold, we need to look at this 85 to 9,000 area as a good floor that could maybe stabilize the price a bit, and maybe keep us from these drops back down into the low 500, low 5,000s or 4,000s. So I think more than anything, that's the one key takeaway from the move that we're getting today. Not necessarily, or the last couple of days, is not necessarily how high can it go, but the fact that we've hopefully established a good floor here, that in the future could be seen as a nice level area to offer support for Bitcoin. Okay, so as far as the GBTC is concerned, and again, I'm on the weekly chart. We'll go back to the day. Actually, I think I want to stay weekly on this. I think the key here is we can look at 850 to 10 as a good support area now, and this breakout still needs to hold, right? You can see on the ETF, the breakout isn't quite as strong as what it was on Bitcoin, just the regular Bitcoin chart. However, you can see that we are breaking and trying to get through this 1260 to 1280 area. We get past that, it should be a quick move up to 14 and possibly all the way up to the 15 to 17 area. And that should be some strong resistance up here as we start to get back into the 17s. However, the key takeaway is very similar to Bitcoin, is what we establish as a floor here. And hopefully the floor that we've just established on this is right around the $9.20 mark. You can see again the big volume coming in as we started to break through that and break out of this range here, 970. And I think more than anything, that's probably the same takeaway we want to have is, can we maintain the price action above this descending trend line? Can we establish a new trend that leaves this behind so that we now have a floor that we could trust as far as Bitcoin or GBTC is concerned? But overall, very bullish move. I don't know if you bought this or if you are still waiting to buy this. If you bought this, you know, maybe you could take a little bit of profit as it comes up into the 13s, but I think the major move really is going to be up to 15 to 17. I think that would be the area that I'd be looking at. Also, I don't know that I'd be trading this in a short term as a short term trade. I think something like this is something I'd probably want to hang on to and maybe trade a little bit longer term. So that might affect where you want to scale in and out of this thing. Okay, if you're not in it yet, then I think you need to wait for a retest of this breakout and hope that we get a move back down into the 11, the 12, the low 12s to mid 11s, and then look for support somewhere in this area to go ahead and try to get involved to the long side. And it could happen. But that would be the area that I'd watch if you weren't in Bitcoin yet and you wanted to go ahead and try to get involved. And for whatever reason, like you were saying before with Coinbase, that you never you open an account but you never put any money in it, and so you might feel more comfortable owning this instead of the actual Bitcoin. In that case, maybe you'd want to look for a retest of this 11 area, and then try to buy it there. Okay, and as far as Bitcoin is concerned, if someone wanted to buy this, I think at this point a retest of 10 is probably a good area to go ahead and try to get involved long term. Okay, short term a little bit of a different story, but long term, I think a retest of 10 to 9.5 would be a really good spot to go ahead and get involved. We may or may not get that depending on how we continue to move. Okay, so hope that helps you. We don't have a lot to discuss as far as this week's trade ideas are concerned, because this market has not given us much. I think the trade we were looking to take this week never really materialized. You can see it's starting to maybe break out today, but at this point, a little bit more leery of it because of how much uncertainty I see in the market today and tomorrow. But you can see we never had a trigger on the breakout of this move, so I never got involved in it. It just kept kind of going down. We never really got that clean break through 15. And it might be trying to do it today, but I think at this point it's a little too late compared to what I'm seeing out of the market. And then the other thing we were looking at was the earnings move on. Which was the earnings trade for this week? Which I didn't take either. Oh, it was on NXPI. And we got a fade on NXPI, but it wasn't enough where I was looking at taking a move on it. I was looking for a little bit further down. And I believe this was the earnings day. We just got one opening candle, and then we just had a quick run up. And it was too quick of a move for me to react because it wasn't right at the level that I was looking at. So this week has been one where I've kind of been sitting on my hands. I still took a couple earnings trades, but they're trades that you're not comfortable with options. I still had a good trade last night and today with Starbucks, where I was anticipating a non-move, and it didn't move up, but not that much. It's up 4%. But that was one I was looking at. And again, I'm probably going to write an article tomorrow looking at Facebook, at one of these or two of these. Facebook, Amazon, Apple, or Google. And I will likely look at one or two of those as earnings trades. And what I'll do is I'll explain my option strategy, and then we'll do the same thing where I'll give some levels to look at the following day and see how they behave. This is a week where it's been pretty busy as far as earnings are concerned, but as far as the regular market, there's just not that much going on right now that looks interesting to me. A lot of names that look good on charts have earnings in the next 2 or 3 days, which makes it very difficult to go ahead and try to recommend a trade on them unless they're earning specifics trades. That's what we're going with this week. So we'll see what happens. Keep an eye out on how we react to the market now in another half hour or so, and then again, I think tomorrow we'll see what happens with these earnings. I think that covers it for today. Thank you, Fat Boys, for showing up. Those of you that are viewing and didn't want to respond or mention anything, thank you for attending. And anyone that's watching this as a recording, like I said, if you like what you see here, you can always follow me on Twitter at StockDarts. You can ask me any question you want on there. If you had a chart request that you felt like asking but couldn't ask in here, I can always just message you a picture of it and my description and my thoughts on it. Just ask me on Twitter. If you like the content, you can also visit me at patreon.com/StockDarts, where you can see some of my trade ideas, like the ones I'm discussing right now with Fat Boys. Other than that, hope you guys have a good rest of this week, and we will meet again next Wednesday.